Good morning. This is the Option Pit AM Volatility Report. I am Mark Sebastian. I am the founder of this company, believe it or not, and wanted to start out by saying this for educational purposes only. None of this should be perceived as financial advice. Consult your financial advisor, as options have risk. Long story short, you lose money, your own dumb fault. So let's talk about the markets. Well, we had VIX expiration this morning, and the VIX settled at 1923. So, people may say, oh, well, what's the deal with VIX, and what was the deal with everything? Well, if you look, VIX settled pretty much in line. There wasn't the whole jerking people around weird settle. It settled within a couple of bucks of where you might expect it to settle. Now, Andrew and I are sitting here in the same room together, and between our heads, we could see a scenario where the market softens all day into the Federal Reserve, and vol eventually gets bid. Now, we've made a nasty move higher, moved about 45 points in 3 days. That's a nice 2% move over a 3-day period. VIX has gone from about 24 to 19. So it gave away a piece of what it picked up, but it's still nicely bid, still trading at a premium to February and January and in line with March, although the curve itself is backward. All right, and that's an important thing to be aware of. Then you have the the kind of total curve. The kind of the whole curve has been gone from contango to backward to flat, and now we're kind of flattish still. Looking around, you can see OIV has gone from about 56 to down back toward 50. When oil got absolutely smushed and OVX or OIV really was not hitting new highs, that was maybe a sign that things are starting to find a form a bottom, starting to find themselves. I do believe that's what's going on. I hate the word FANG stock, but if you look at FANG, Apple has been getting slammed, and Facebook's been soft, Amazon's been soft. Really, all of the popular names have been soft. A little bit of more strength in some of the financials. They've been doing a lot better. They're still not where we thought they might be, but they are doing a lot better. And TLT continues to have backed off a little bit from its highs. Now, HYG, where the vol has just been through the roof, seems to have formed some sort of bottom. At least in the near term, they're backing off volatility. It may be a nice. It may continue to move around, but it's the kind of the high yield panic is over, at least for now. So that's kind of the way everything is lining up and kind of where the day is going. On the day, I think after the Federal Reserve announcement, the VIX will fall from 1925 towards 17. And you'll see the Jan future, which currently is around 1870, probably trade down to about 18. Then probably some continued follow through over the next couple of days. We saw this with the tapering, where initially the market sold off on the announcement and then rallied relatively hard over the upcoming 2 or 3 days before we then had a follow-up. I think we set up for the same thing. I think we could absolutely rally into Christmas Eve, maybe rally into the new year, but coming January, we have a lot of money that's been made and a lot of people that are saying, well, the Fed's not there anymore. Maybe I should actually book some of these profits. And, that's kind of the way I think things line up and the way I'm kind of approaching things over the next couple of days and weeks. All right, folks. I hope everybody has a great day, and I will talk to you soon. I got questions, email me marketoptionpick.com. You can call me 888-TRADE-01. Thanks.